It's about that time of day again. My name is Joseph. Thursday evening, July 12th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bearish with a spike in channel pattern, and that tells me to look for selling opportunities using the 2-try rule and seller failures at the high of the channel tomorrow morning. The S&P is bullish with a big wedge pattern tonight, and that tells me to look for buying opportunities using seller failures at the low of a hidden channel tomorrow morning. Don't forget the Nasdaq. Nasdaq is very bullish, right? Big spike in channel pattern to finish up the session on the Nasdaq this afternoon. That tells me to look for buying opportunities, but I'm waiting for a deep pullback, and I got my eyes on the battle zone on the NQ tomorrow. Stay tuned for more on that in just a moment. How about some gold? Yellow metal is bearish, but the sellers are boxed in, and their second try failed to retest today's low. So I'm looking for buying opportunities ahead of what could be a nice short covering rally back up to that weekly close tomorrow morning. The euro is bearish with a spike in range pattern here tonight. That tells me to focus on selling opportunities up above the range highs tomorrow morning. Well, guys, we're ready to wrap up what's been a great week of trading opportunities with a summer Friday trading session kicking off tomorrow morning. And as always, I got a great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow's session. Before we jump into the charts, though, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in the video tonight, please remember to post them in the comments section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. Upper left-hand corner, give me your name and your email address, and I'll send you an email every time I publish another video. If you're on social throughout the day, stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I'm always posting exclusive content, charts, videos, links, quotes, all kinds of stuff on my social media channels. If you're on social, find me in the lower left-hand corner of the blog. And don't forget about today's charts. All the charts from tonight's video, you can have this on your computer ready for tomorrow. Follow that link below the video tonight and grab those charts and be ready for tomorrow. And speaking of tomorrow, what are you waiting for? Grab that free pass in the upper right-hand corner. If you'd like to come out and join me as a guest in the trade room, get a deeper dive and learn more about our trading strategy here at School of Trade, grab that free pass in the upper right-hand corner, and I'll see you in the trade room. Any questions? You can post those questions in the comment section on YouTube. You can hit me up on live support, right? Or there's always a toll-free number on the homepage of our website. All right, let's jump right in. Great to have you guys back here with me here this evening. Ready to wrap up the week here. I can't believe this week already flew right by. It's been a great week so far. A summertime week. We definitely felt the heat is rising, and of course volume is dropping a little bit. You know, there's always kind of a negative correlation between, you know, how good the weather is outside, right, and how the price action's doing on the chart. So as we mentioned this week earlier, right, as you mentioned earlier this week, the month of July is all about staying patient and waiting for that, you know, 15 to 20% of the day that's going to be tradable. There's going to be times when it's very slow and it's going to make you want to force trades. The most important thing in the month of July is not giving back the money, right, that you made in the months of April, May, and June. It's really easy to get forcing trades in the month of July, right? So that's really kind of the mindset you want to be having in this month of July, right? Make them prove it to you, right? Make them move this market around, and be careful during those times when things are very slow, right? And we definitely saw some examples of that this week. Now, tomorrow's a Friday, right? And is that what I think it is. All right. Well, tomorrow is Friday the 13th, right? It's amazing, right, how often we have Friday the 13th. Now, I'm not much of a superstitious guy myself, but if you are, you might want to watch the black cats and the broken mirrors and, steer clear of those ladders and, toss the salt over one of your shoulders or something like that tomorrow morning. But I don't think we're going to have too much of a problem with tomorrow being a Friday the 13th session, though. We do, however, right, have a couple big policies we follow on a Friday morning. First of all, Friday mornings, especially a summertime Friday, is going to be early in and early out. I always say get to those trades as early as you can on Friday, because remember, at the end of the day, at the end of the week, and at the end of the month, traders take bigger risks, right? Maybe you lost money this week. I have so many bad, painful memories as a new trader many, many years ago on a Friday afternoon trying to dig myself out of that weekly hole I was in, and you know what happens. You just end up losing any more. You end up losing more money on top of it. So you got traders who were trying to dig their way out of holes on Friday afternoon. And don't forget, right, you get those traders who had a great week and they're all loosey-goosey with their rules, right? They're being more aggressive on a Friday afternoon. Combine that with the fact that I'm sure a lot of traders are going to be getting out of the office as soon as they can tomorrow, right? Kids want to go away camping for the weekend, right? Whatever people are doing on their summertime, right, weekends. There's only so many of them, right? So people will be leaving the office early. We expect volume to dry up early, and we expect volatility, right, and unpredictability, right, to increase as we get later in the day on a Friday. My rule of thumb: you got to have a good reason to be entering into new positions, right, after 11 o'clock Eastern time on Friday morning. So early in, early out. What else do we talk about for a Friday, right? Let a lot of these today. Prior week levels, right? Prior week open, high, low, and close levels, right? The OHLC, right? So last week, okay, the high, the low, the open, and the close. The most important are pretty much everything besides the open. The opening price isn't as important as the high, low, and close. And that's not just for the prior week stuff. That's for every candlestick. I mean, that's pretty much standard operating procedure, right? The high, the low, and the closing price of last week are going to be magnets. And we get a bunch of them, right? We got some levels all over the markets today, setting up for tomorrow's session, where we can definitely look for those prior week levels to become price magnets. So we're watching those for price magnets, right, tomorrow morning as well. So early in, early out. Prior week open, high, low, close, right? We got football on television. We got Summer Friday coming around the corner here. So get to it early, right? Get to it early. We don't want to be forcing trades late in the session. You can see here there's no major news on the schedule for tomorrow. We are going to get that Fed semi-annual monetary policy report, but I doubt this will have too big of a market-moving effect tomorrow morning. As always, though, we're keeping our eyes and ears open right now. We've got trade talks and tariffs, right? We've got NATO back and forth this week, right? We've got the bickering back and forth among OPEC nations right now, right? And Russia with their new pipeline. It's a lot going on right now. So who knows, right? Maybe tomorrow we wake up to some big headlines and we get some nice big juicy moves off of that. Hopefully we do, right? Hopefully we do. We won't know more. We won't know that until we get there. So early in, early out, right? Prior week, open, high, low, close levels. Let's do this. Let's roll those sleeves up. Let's grab some charts here right now, and let's get this thing going here today. We got crude oil, S&P, Nasdaq, gold, and then, of course, we're going to wrap up here tonight on the euro. Crude is bearish with a large spike and channel pattern, which tells me to look for selling opportunities up at the high of the channel. But it's important to recognize the width of this channel, right? This width will allow the bulls to gain momentum. So selling opportunities need to be used after the buyers try and fail to hold the pullback to the moving average. Now, knowing this, right, if the bulls can grab control with a 1, 2, 3 reversal, I have to assume they're going to be running back to where? Yeah, back to that prior week low at 72.14. And if we see that, we're going to look for another channel and look to buy the low of that channel. Now, as I look at this chart here tonight, it's relatively self-explanatory, right? We had that big drop down on Wednesday's session. We pulled back, and as I mentioned in last night's newsletter, right, if we made a new lower low, I'm now going to draw those two lows and draw this in, right, as a channel, right? That tells me now I want to sell the high of this channel. Okay, now this is a very good learning opportunity, right? And technical analysis, there's so much to learn about technical analysis. One of the keys, right, to timing your entry is the width, right? Is the width. For example, right, if we had a, let's just say, a real narrow channel, right? If I have a really narrow channel here, I can be relatively aggressive selling at the top of that channel. And the reason why is because there isn't much space for the buyers to gain any momentum, right? So buyers aren't even going to really try. There won't be that many buyers even at all in this market. But if I widen that channel out, right? If that channel becomes a lot wider now, see what's happening now? Now, yeah, we're bearish, right? But now as the market goes higher here, boy, this can really get tough to sell back down, right, off that high, right? As it goes lower, it goes in free fall. But as it goes higher here, right, we have all of this momentum that can build going higher. And the moral of the story is it can really make for a difficult time selling it back down. So we have to be strategic here, right? We expect with that wide channel, right? I'm expecting we're going to see something like we saw earlier in today's session, right? We go up, the buyers try to buy that pullback. We talked about this last night, right? They try to buy that pullback, right? Once I see them failing, I can now sell, right, into their stops, right? So we have to have some sort of edge like that once we go back to that high. We can't just try to sell it because momentum is too strong. Okay, so now as we go back to these highs, right, I want to sell up around these highs, right? But can I just start selling it like that? You can, but it's not going to be the most reliable trade you can find. Will be much more reliable will be because that momentum is going higher, right? Because the width of that channel is so strong, right? It's much better to wait and see if these buyers, right, can hold that pullback, right? So really this all comes down to really one of two things tomorrow morning. Do the buyers hold that pullback and run? If they do, we're probably headed back to that prior week low, right? We get that key trend line coming down. We talked about that in last night's newsletter, right? So that's the scenario for the buyers tomorrow. But again, we're bearish right now, so I'd like to look for, right, a buyer trying, right, buyer failing. That should result in something similar to what we saw here, right? And of course, we pull back to that moving average and finish off that move back down. We've talked about these patterns quite a bit this week, right, on this newsletter, right? So looking for what I call a two try, right? A one try, two try, right? A two try failure. Again, what you're doing is you're trying to sell off the high of that channel, but you're allowing the buyers to give it one more shot. Again, that momentum will be just strong enough because of the width of that, right, of that channel. We want to offset that momentum by selling into their stops. That way, when the buyers are getting out, we're getting in, right, and everyone's, right, sellers. Now, from there, we don't want to chase after it, though. We want to wait and try to sell high, sell at resistance, and we'll look to sell on that pullback. So the width of this channel says I've got to respect, right, these bulls. I'm going to use what I call the two try rule for a seller failure into bearish strength, into bear pullback, right, for the move back down again. Now, if we can get the buyers to take control of this, right, if the buyers can go up, pull back to the moving average, and give us that 1, 2, 3 reversal, right, that we've talked about quite a bit already, right, 1, 2, 3, right, 1, 2, 3 meaning 1 on strength, 2 pulling back, and 3 on strength. Now remember, it's got to pull back to the moving average, right? Got to pull back to the moving average, okay? There's no such thing as a 1, 2, 3 reversal without a pull back to the moving average. Okay, if it doesn't pull back, wait for it. Okay, because that's going to be the proof you need coming off that moving average. If we can get that 1, 2, 3 reversal, now the writing's on the wall, right? That prior week low, which we know is a magnet on a Friday, right? That becomes a key level, right, of resistance and a key target for us now to be buying at the low of that channel. All right, guys, so that's the plan if these buyers can take it, right? So, of course, up, 1 try, 2 try, failure, strength, pull back down. And then remember, the objective for the sellers is to retest that low. So let's just fast forward here real quick, and let's just say, for example, right, that we end up back down to that low. Right? Watch for a bounce off of that low. This then becomes a trading range, and we'll look to sell. Same thing. 1, 2, failure, strength. We'll look to sell, right, back down to that low. Okay? If we roll over and we keep going, oftentimes that results in what we call a spike in channel, which is what we're looking for right now. But if we go back down and we keep going, right? Oftentimes it'll result in a spike in channel. Find that new channel, find those swings, right? And sell with a trap, right? It'll oftentimes come all the way back, right, to where it left, and we'll be able to use that as resistance. So boy, we covered a lot here so far, right? The 1, 2, 3 reversal into a hidden channel, buying the low of that channel, the 1 try, 2 try, failure, strength, pullback, right? Another one, going lower, bouncing into a range, 1 try, 2 try, back down, right? Or running and becoming a new spike in channel and sell, right? Selling higher here now. Now, are you here for the first time today? If you're joining me this evening for the first time on this newsletter, it's great to have you here with me. We're going to do this every night, Monday through Thursday. I want to give you a shortcut. Okay, I'm going to use a lot of terminology. I'm going to talk about a lot of patterns here tonight. I don't have time to go into a deep dive on this video tonight, but I want to give you a deep dive with a free trading course in the upper right-hand corner. Pause the video for me. Not to worry. I'll be waiting when you come back. Grab that free trading course. It'll take you to my website, ask you to register, right? Give me your name and your email address, and I'll send you an invite to participate in this free trading class. Okay, they'll teach you all the information you need to know so you can make the most out of our newsletter, right? And you'll probably see an instant improvement in your own trading just with that extra knowledge. All right, guys, so grab that free course in the upper right-hand corner. Okay, so now we know what the bulls want to do, the bears want to do. I think we're looking good here on the oil. Now all we need is to give it some time here for tomorrow. How about some S&P? We got some E-minis here now. We'll go S&P first. We'll go Nasdaq, right, coming up next. S&P is bullish with a spike and wedge pattern, which ran all the way to that 2,800 round number before going sideways with a range. The bulls have control. But with this measured move, with this range high, and with this resistance, right, this wedge resistance, all stacking up on top of each other around this 28 to 28.2 area, I'm going to ease off the gas pedal here, right? I'm going to look for more reliable buying opportunities down at support levels tomorrow morning, such as the low of a hidden channel. Okay, now real quick, look at the chart here right now. Lots of stuff going on in this chart right now. The most obvious, or should I say the most important, is this wedge. Okay, now wedges are really, really important to understand. They're not as common as channels, right? But they are really important to understand. Couple things about wedges. First of all, follow the direction and be very, very careful trying to predict a reversal. Here's why. On a wedge, when we have a big wide open space, or should I say, when the wedge is wide, you can trade inside the wedge. But when the wedge gets narrower, like we're seeing it right now, we oftentimes see a sharp pullback. Now, why would it be a sharp pullback? Because there's no space inside the wedge. And when there's no space, right, if you're going to buy the low of the wedge and your target is literally 2 or 3 ticks above it, right, that's not a very enticing buying opportunity, for the bulls. So again, what the key here is stick to the direction of the wedge. When it's wide, buy the low, take your profit at the high. But when it gets narrow like this, not only does the range get smaller, which gives the buyers almost no incentive to buy up here, right? What will happen is with fewer buyers, the price will have to pull back, right, to attract more buyers. And we oftentimes see a real sharp correction. Now, don't let that fool you. That's why I said don't forget, go with the direction of that, right, of that wedge, right? And basically, there's one of two scenarios that you're looking for, right? So if we pull back off this wedge high, you're looking for either the sellers can get their 1, 2, 3 reversal, right? Kind of similar to what we just talked about on oil, but the opposite direction. Right? So if we do get that deep pullback off the high, and again, the motivation for that deep pullback, if you think about the psychology of the market, is the buyers don't want to buy into this resistance. Okay, on top of that, you get a measured move up here, right? So it's pretty easy to see how this can be pretty challenging for the buyers. Okay, so if we pull back, we're basically looking for one of two scenarios. Scenario one would be the 1, 2, 3 reversal, right? The market completely reverses. We draw out that new channel off those lows, we bring it up to that high, and we then look for a sell right off the high of that channel. Okay, we call that a hidden channel, and the target for the sellers at that point will be back down to retest that low. Now, that will require a very dramatic news event tomorrow, political announcement, right? Who knows, right? But that would definitely require these buyers to completely change their opinion of value, right, on this market. What is a little bit more likely, anything is possible, right? But what's a little more probable would be we have buyers now waiting down at these swings down here, right? They know this market ran today. They want to buy it low so they can bring it back up to retest that high. Again, sharp correction down. Moving average comes over. Sellers try to come in with the 1, 2, 3 reversal. What happens? They try and they fail. Now, at this point, the buyers are just looking for any sign of an edge, right? It's that strong pullback down. The buyers are going to think, well, what I always think is, I always sort of put myself in the opposite side shoes. So if I want to be a buyer in a bull market, of course, right? I want to buy low, so I wait for a pullback, and then I want to think, okay, where could I buy where I can get an edge over the sellers? If I'm a buyer, I want to buy into the point where the sellers get in trouble. So where would their stop be? Probably right above that high. Okay, this is a very easy pattern. Okay, this will be that 2-try failure, right? 1 try, 2 try. Let those bears try once. Let them try twice, right? Once they start failing, we look for the buy above their stops. That'll bring the moving average over, and we can then look for that pullback to go back up and retest that high. Okay, so 2-try failure, seller failure, bullish strength, right? Bullish pullback. And again, to see a lot more examples of these individual patterns, failures, pullbacks, strengths, right? Trap patterns, make sure you grab that free trading class in the upper right-hand corner, like I mentioned earlier. Now, where's the objective for these buyers? The objective is right back up at this 2,800 area. So remember, you want to get that deep pullback, right? The deeper it goes, the more incentive those buyers have, right? Because the more profit potential they have as we go higher. Now, speaking of going higher, right? What if we do go higher here? If we go higher, I'm still waiting for that deep pullback, right? If we go higher and we just run, watch for a new spike in channel, right? Because that's what it would take right now. If this market's going to keep going higher here, it's going to do it on some sort of strength, right? This will be something completely emotional, completely irrational, which, I'm not in a position to make the decision, right? The market does what the market does. If we see it keep going, right? If it keeps rolling here, I can actually use that wedge now as a support level, right, as it goes higher. So watch that if it goes higher through it. At the same time here, if we sit here at these highs, right? If we sit here at these highs, I'm still waiting for that 1 try, 2 try, failure, back up, right? So now we know reversal, you got it, right? Now we know 1 try, 2 try. Now we know if it goes sideways, right, inside that trading range, 1 try, 2 try, buy off that low. And again, if it goes higher here, use that wedge, right? If it goes higher here and keeps going, use that wedge now, right, for your support to be a buyer, right, which what was resistance, right, you can buy it as support. So S&P very, very bullish here right now, but looks to me like they found a pretty happy place here, so we'll see where they go next. Would love to see a deep pullback on the E-mini. Now, from one E-mini mark to another, here's the Nasdaq. The Nasdaq is bullish with a strong spike and channel pattern all the way up to the triple up target this evening. This market is clearly bullish, but the lack of any decent pullbacks today tells me there are likely a lot of buyers still waiting to get into this move, but they're going to want to do it at a lower price. Knowing this, my plan with a spike in channel is to always look for buying opportunities down near the base of that channel. So I'm staying patient for the bulls to take some profit and give us another opportunity to buy low tomorrow morning. Now, here's another type of spike pattern, right? On the S&P, it was a spike and wedge, and you can see this is kind of like a spike and wedge right there, right? And this happens quite a bit when we see kind of a spike and wedge that keeps running. That's why I said on the S&P, right, if we push through that wedge and keep going, right, it'll usually turn into a spike and channel, right? You'd be amazed how many times we see spike and channels and spike and wedges that break free and turn into new spike and channels and spike and wedges. Now, to give you a little bit of reference here, you can see how far away from that prior week high we are, right? Not even close. It's not even part of the story tonight. Right? It's irrelevant for tomorrow's price action. Now, obviously, if this thing collapsed on the 1, 2, 3 reversal, then that prior week high becomes a bit of a target. But still, you're asking quite a bit, right, on a Friday session down at 37 3/4. So probably, possible, but not probable, right, of getting that prior week level tested here tomorrow. You'll notice here, guys, real quickly here, you'll notice here, I'm taking this strong move up, right? We go up. Take that leg, right, double up, right, triple up. You'll notice we are right now, right, up at that triple up. One more level up is the quadruple up, right around that 74.33 level, right, waiting overhead. So relatively easy to see, right, where the bulls would like to go next, right, if they can get it. And most important thing right now, though, is this spike and channel. Spike up, pull back, new higher high. We draw the channel off that new higher high. We then look for buying opportunities off the low of that channel. Now, the most important thing you want to remember about a spike in channel is strength, right? This spike higher, right? That spike higher. Most people are going to buy either on that spike, or they're going to buy that pullback, or they're going to buy this pullback or this pullback. The moral of the story is whenever you see a spike in channel, right? And I always remind my clients to look for the rule of 3. 1, 2, 3. Right? So here we have the buyer spike. There's one aggressive buying opportunity for trend followers. Pullback 2, pullback 3, pullback 4. At this point, everybody should already be in the market long. Now, what happens when everybody's long? There's nobody left to buy anymore up here, right? The buyers are fat and happy. Okay, eventually they'll take some profit here, right? But how do we get more buyers in this market? We have to get a pullback. So this is very similar to a wedge, right? Whereas a wedge has a lack of open space when the wedge gets narrow. A spike and channel, by the time we see that spike, 1 pullback, 2 pullbacks, 3 pullbacks, there have literally been 4 beautiful opportunities for these buyers to find their way in. That means there's no excuse, right? All the bulls are either in, right, or they're just about to take their profit, right, as the market goes higher. So I want to get a deep pullback because now that's the only way to really get more buyers involved. Now, how far does the pullback usually go? Well, the ideal scenario for a spike in channel is to go back to the base of that channel. In other words, go back to where the channel hits the spike, right? And you can see what I'm doing here. I'm kind of using this reversal line, a prior swing high, right? I can use it as, right, as support, as a swing low, right? That prior resistance as support. So I'm really looking for this whole area right in there, right? That will be the ideal. That's the base of this channel. Okay, now that's the ideal. That's the textbook scenario, right? That's the postcard, perfect, right? Wish you were here type of scenario, right? What I looking for though is I want to see a deep pullback, right? Deep pullbacks are going to be key when it comes to a spike in channel. So although yes, I'd love to see us pull all the way back to the base of that channel, right? I know that what I really need though is some sort of pullback, get us a trap, get us something pulling back off that high to attract more buyers. That's where the most reliable trade is likely going to be for tomorrow. So really it all comes down to, right, do we keep going higher? Do we go sideways here? Right? Because oftentimes when you see a market that goes that far, that fast, oftentimes the following day is completely sideways, just as we saw, right, on the crude today. So do we go up? Do we go down? Do we go sideways? Let's plan it out. Now I'd like for us to go lower. Obviously, it'd be perfect, right? Let's go lower. Okay, get those buyers, take some profit. When the buyers take their profit, again, everybody's already in this move, right? The collective everybody, that is. So when the price pulls back, it'll probably pull back pretty sharp, right? Remember, anytime we see a strong move in one direction, right, a counter trend move like that, we expect we're going to see sellers try to sell that pullback, right? The sellers now are going to have their shot for a 1, 2, 3 reversal. Now remember, first leg down has to be strong. Okay, that strong move lower will then give sellers the guts they need to try to sell that pullback. At that point now, I'm not looking for just a little tiny move lower. This thing needs to really jump off that moving average. That's why I call it, right, the 1, 2, 3 reversal. It's not just a three-legged move, right, or two-legged move, right? It's a strength, pullback, strength. Once I see that strength, pullback, strength, that 1, 2, 3 reversal, then we're going to go out, grab that low, up to that high, and we can then look for those sells going back down, right? Maybe we get down to that prior week, right, that prior week high, but highly, highly unlikely, right? So that's the game plan for those sellers. It's patience, patience, patience right now to be a seller, right? Be very, very careful trying to sell this market. I don't care how high it's gone, how far it's gone. It's not done until it says it's done. Okay, the market can be irrational much longer, right, than we can stay in our losing positions, right? So what else now? If the market goes sideways, right, oftentimes we see this much movement, right, 2% move in one day, right? Oftentimes we see this much movement. We're going to see a sideways range. So we get the price going up, we pull back, we double top. Okay, the minute you see a double top in a bull market, and remember, like I said last night, it doesn't need to be a perfect double top. It just needs to be close. Okay, but the minute you see that close enough, right, double top, you mark the highs, you find the deepest part of the pullback, right? You mark that as the low. That becomes your trading range. Now we have a bull market into a range. My goal now is pretty simple. 2 try rule, buying down below the low of that range. How does it work? We wait to go once, twice, right? 2 try rule again, 1 try, 2 try. There'll be a moving average coming over, right? There'll be a moving average coming over. I'm looking for that failure at the moving average, strength, pullback, and back to retest the high. So remember, let those bears once, twice, let them try twice. Then we look for that failure, right, and buy it back up. Okay, and now, guys, that goes even if the market really takes off the downside, right? What if it really runs, right? What if it goes up, back, double tops like this, right? What if it really goes? Great. The bigger the pullback, the bigger the incentive to get long. But am I going to simply buy it? No. Momentum is too strong. Wait for it now. 1 try, 2 try, right? And then we look for that move going back up. Right? Let that momentum tire out. Okay? You'll have much better results that way. Because what happens a lot of times is, right, if I buy here, if I try buying this, I'll get a little bit of profit, right? A little bit of unrealized gains, but then it will come back and run me out. Then what happens? It goes right back where you were trying to go in the first place. There's nothing worse than that little, okey doke, stop run, right? Now you see us, now you don't, type of stop out. Right, so be careful of that. Right, be careful of that deep pullback. Now, what if we go higher here? right? If we go higher here, again, we're trying to buy a deep pullback here right now, right? But what if we go higher? We pull back, shallow pullback, right? We keep going higher here. Nothing changes, right? Nothing changes. Keep up finding those swings, right? Keep waiting for that deep pullback to try, failure, strength, right? And then retest of that high. All right, guys, we see a lot of these spike and channel patterns. Spike and channel patterns are one of the, I would say out of all the things that we teach in our intermediate classes, the spike and channel is one of those patterns that you see so often, and it's so reliable that you really could just focus on trading spike and channels. I have a whole chapter dedicated to spike and channels in our free trading class. Right, grab that free course in the upper right-hand corner. You will not be disappointed, right? Grab that little information icon in the upper right-hand corner. So now we know if price goes up, we know if it goes down, we know if it goes sideways, and we even know what a plan is tomorrow, right, if the market reverses. Let's keep going here. Now, that was the easy stuff. That was the easy stuff. I hope you're hydrated because this is going to get a little bit intense here. Gold is bearish, but the sellers are boxed in after they tried and failed to retest the low. That gives us a higher low, a rising support trend line, and a big obstacle to overcome if they want any hope of running this price lower tomorrow morning. Now, I'm anticipating a short covering rally back into the range from earlier this week, but I don't have enough proof to start buying yet. So I need to either wait for the run higher to confirm the 1, 2, 3 reversal, or I can start looking for buying opportunities at the low of the channel tomorrow, in hopes, of course, that sellers will chase price lower and then find themselves stuck on the wrong side of this market. Now, it's very, very important that you recognize on the gold tonight that this market is a bear market, right? We haven't seen that strength, pullback strength yet, right? We haven't seen that 1, 2, 3 reversal. Okay, so it's very important that you understand this market it's teetering, right? It's teetering. It looks a lot like this back here, right? We can see the buyers have a shot right now, but they need to prove it or this market will drop again. Now, there's one big difference, though, about this situation we saw a couple days ago. This is what I call being boxed in. In other words, the market's bearish, but they're really running out of options right now. You'll notice here, right, we saw that strong move down to finish yesterday's session. Okay, well now the bears, they tried once, failed. They'll now go to a higher price. That's always the key to a two-try. Higher price, failed, right? They're trying again, and they're not getting very much ground here. I mean, well, what do you think, right? If you were a seller and you said, I'm going to try it here. Oh, that didn't work. I'll try it here. That didn't work. I'm going to try it here. I mean, how many more times would you keep swinging at that pitch, right? How many more times would you keep trying to short this sucker before you give up on it, right? 2, 3. Well, this has been 4, maybe 5 times now, right? The bears are trying to sell. So psychologically, I put myself in the shoes of the bears, and I don't trust this thing anymore, right? Technically, right, psychologically, they have to be getting tired, right, swinging and missing, right? But technically speaking, though, it's easy to see now with these higher lows, we've got some serious support trend lines in here now, right? You could draw that support trend line like that, right? Draw it like this. There's a lot of different ways in which you could draw that trend line. Okay, so when I'm looking at this chart, I think to myself, okay, we definitely know the market's bearish. The bears want to get back down to retest that low. In fact, they probably want to get down to that prior week low, right? Tomorrow's Friday. Remember that from earlier on in the video? So now we know where the bears want to go. And ideally, I'd like to see them try one more time to really drive this thing lower. Ideally, right, it would go right down to the top of this trend line. Then, of course, we have that, let's go different color here, break out my box of crayons, right? Hopefully we get that move down, moving average comes over, bears now try to sell it, now we're talking, right? Bears can't hold it, They fail. Now, this move higher could be very, very strong here. These are oftentimes very strong. We call these crown reversal patterns, right, in our trade room. And they can be very, very explosive, right? So hopefully we'll get that pullback, right, to that moving average. Sometimes, though, these failures, they'll just go, right? Again, short covering rally. Right, all the sellers who are in the market that are watching this thing collapse on them, right, they're going to get out quickly, and that will oftentimes, right, punch that price higher. Right, I love to buy the pullback there as well. Right, so 2-try rule, seller failure. Again, I'd like to get it off that little trend line here down here, right? That will be ideal. Okay, and also don't forget too, if we see it go 1-try, 2-try failure, don't be afraid to find that new hidden channel. Right, again, if it doesn't pull back, right, and then wait for the pullback eventually it'll pull back. Want to buy the low, right, of that channel. All right, guys. So that's what I'm looking for if price pulls back here. All right. Now, as a buyer, right, what if this thing just takes off, right? What if it just takes off to the upside? Again, I mean, how many more swings are these bears going to take? Right. So maybe we don't get a deep pullback and a failure back up. Right. Maybe it just jumps. Okay, so if it jumps up here, now I have to be a little bit more creative. So kind of follow the bouncing ball here. Get rid of these arrows. That way we simplify this, right? 1, 2, 3, reversal, right? 1, 2, 3, reversal. Strength, pullback, strength. Remember, it's all about personality as it goes higher, okay? This little channel I have drawn right here is not going to hold up on reversal, right? It'll break down. So that channel is pretty much out of the picture at that point. At this point now, find that new high up to that low, and I'm staying patient here now, right, to buy, right, the low of that hidden channel. Hey, maybe we get a pullback, right? Maybe it pulls back, right, to that channel high there. Who knows, right? But again, we're trying to look for that buy off that hidden channel. All right, guys? Now, how do the sellers do this, right? What do the sellers look like tomorrow? How would the bears actually get this? Well, there's really 2 scenarios for the bears. Both of those scenarios require a successful move lower. Okay, and my definition of a successful move lower is I got to see it retest that low. The problem is that we see this pattern all the time where it goes down, higher low, it'll trap, and then jump, right? Again, you'll notice, right, higher low, lower low, right? That pattern is very, very common. You might be looking at that going, it's a Gartley pattern, one of those, weird harmonic patterns, right? I think those patterns, by the way, are way too complicated. I don't think you need to go to that extent. There's so many other great, easier ways to do this. So anyways, bottom line, though, is that's a very common pattern, too. So I get to see this bears go back down to that low. Now, once I see him go back down to that low, now I've got basically 2 choices. One is we go through and to sell on the way down to that prior week low, or we bounce and sell high right off of these levels of resistance now. Right? Makes sense? Okay, so we head back down, we run lower, up, sell back down, trap high, off resistance. Okay, or 1, we roll lower, right? We roll lower here. We retest our low, find that new channel, right? And sell, right? And sell high before we get down to that prior week low. This could be a little bit of a threading the needle, right, as we go lower, because what you don't want to do is try to get lucky selling down here. Because those type of situations, they oftentimes will go back, right, against you and really backfire against you. All right, guys? So now we know what we're looking for, right? Strength, pullback, strength, new bull channel. Where are they going higher to? Aha! Prior week close. So buyers want to go to the prior week close, right? Where do the sellers want to go? The sellers want to go back down to retest that low, right? That's their objective. They can get through it, then the prior week low from there. All right, guys? It's very, very important right now, though, again, you remember, we are bearish right now. So be very, very careful, right, being a buyer until we see, right, the chance to go long off of support and into those failures for the sellers. Now, how about some euro? Boy, you could definitely tell the euro was waiting on something. They had that NATO meeting today. All this dust is getting kicked up about NATO this week, right? You can definitely feel that was weighing on the euro right here in today's session. Not a lot of volume today on the euro. There may not be much tomorrow as well. The euro is one of those markets where, again, summertime trading, you just got to be patient. right? Don't force it. The worst thing you can do on a market like we saw today on the euro was just force trades because you're going to lose money, right? There's actually something worse than not taking any trades. Losing money is worse than sitting on hands and waiting patiently, right? So you do the math, right? It's up to you. You can force trades and lose money, make it even worse, right? If you can't sit there and wait patiently, go fishing, go golf, right? Go do something else, right? Besides trading when it's slow like that we saw today on the euro. Euro is bearish with a spike and range pattern this evening, and that tells me to focus on selling opportunities, right? Using buyer failures and the 2-try rule up above the high of the range tomorrow morning. Now, if price continues to tumble, however, my plan is then to look for a spike and channel pattern with a target down at that prior week low. Where's that prior week low? Here's the prior week high. Big target for the buyers here. Where's the prior week low? Right there she is, right there, right? 16,600 or so, right? That prior week low, right? Most charting software will have those prior weeks, right? Highs and lows. I provide all the indicators for my clients here at School of Trade. So we know we have, right, prior week levels are nice big targets. Strong move down, right, into a trading range. Okay, sell the high, buy the low, sell the high, what? Buy the low, right? So we got to be careful down here. We got a nice big measured move, right? That measured move's going to act as support here. The most important thing right now, though, is the bears have the edge, right? Bears have the edge, and we have a trading range. So trying to be a seller or a buyer down here below the low of that range is going to be a disaster waiting to happen. If I want to be a seller, there are basically 2 scenarios to look for. One scenario would be up, 1 try, 2 try, failure, strength, pullback, right, and back down. Now, range-bound markets, right? Range-bound markets, a market that has double tops, double bottoms, trading sideways. Okay, I have a lot of examples of range-bound markets in that free trading course in the upper right-hand corner, right? Grab that information icon, register for the free course. You'll be thankful you did, right? You'll see a lot of improvement in a very short period of time just by using the simple principles I teach in that free trading class. So one scenario for the bears would be up, right? Nice strong up. Moving average comes over. Buyers try to buy the pullback, right? If they're successful, 1, 2, 3, right? We find that new channel. We buy the low of that channel, and we're headed up to that prior week high. Right? If they can't 1, 2, 3, right? Then failure, strength, pullback, right? Back down to retest that low, right? Where's the objective? The objective is back down to retest the low of that range. If you got some extra bullets left in the gun, you can hold it right back down to retest that low. Okay, usually though, when you see a range, the range is the most important clue, right, that you're going to be working with. So knowing that, what else can we work with here? Well, how do we break out of a range, right? How do we break out of a range? I mean, surely a strong breakout would be enough, right? Well, if that's all it took, then what happened here? Strong breakout, right? That one didn't hold. Now notice what happened here. Strong move down, pull back to the moving average. Bears tried and they failed, right? Great example of that failure pattern, right? We go above the moving average, buyers try to buy, they fail, pull back and go, right? Okay, so how do we go lower here? That's the moral of the story here, right? We want to see something like this, but be successful, right? So moving average comes down, strong move down, but now we have to hold it, right? Show me. Again, we talked about the 1, 2, 3 reversal, right? Well, how about the 1, 2, 3 breakout? That's pretty much the same thing, right? Strong move down, pull back to the moving average, strong move down through it. Okay, now, if we get that strong move through, then what do? We look at that as a new spike and channel, right? We're trying to sell the high of that channel. Remember the law of threes, right, on those channels, right? And then find those prior swings, and up so we can sell it back down again. Okay, if we break through on strength going lower, the writing's on the wall. They're likely going to be hunting for that prior week low. Why? Because tomorrow is a Friday, right? It is a summer Friday though, so don't forget, right? Early in, early out. Wear your wear your sunblock, right? Make sure you got that SPF in full gear tomorrow morning. I'm joking with you guys. But all kidding aside though, I hope you found a lot of learning opportunities tonight. I hope you learned this stuff. I hope you use this stuff this week, right? To either grow your account or maybe just stop losing money every day. You know, it's always kind of the first step in the right direction. I remember when I was a new trader, it was lose, 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 and then break even, then win, right? So very rarely do we go from losing to winning, right? Half the battle is simply recognizing what we're doing wrong, making improvements, keeping our capital, right? And then starting to grow the account, right? Again, guys, I have a proven system. I've been teaching this for over 10 years. It'll be 11 years. I can't believe that. We've opened up our trade room in December 2008. It doesn't sound like it was 10 years ago. Well, almost 11 years ago, right? So almost 11 years now in our trade room. I've helped thousands of clients do this the right way. I got plenty of great words from our members on our website here. Check them out on the right-hand side of the website. But again, if you want to learn more, I get a free trial on our homepage, right? It's the best of the best free trial in the business. Grab that on the homepage. Again, that free course is linked in the upper right-hand corner. I've got beginner, intermediate, and advanced classes, guys. I have so many ways to help you grow your account, right, and launch a successful career in the business of day trading. Learn more on the website. And if you have any questions, hit me up on live support. Post those comments in the comment section below. Or don't forget, you can always call me at that toll-free number. I'll be around all day tomorrow, right, outside, of course, trading hours tomorrow. And, of course, I'll be available this weekend. My phone will forward to my cell phone. All right, guys, so don't be afraid to call the office if you have any questions. In the meantime, have a wonderful, wonderful Friday. If I don't see you guys tomorrow morning in the trade room, 8 o'clock Eastern time, have a great, great weekend. Be careful out there. Right, make sure you wear the floaties in the pool this weekend. Stay hydrated, stay cool. Right, it's been pretty warm out there so far the month of July. And we'll plan on seeing you guys back same time, same place on Monday evening. Once again, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye bye for now.